Good afternoon. This is Chris Robinson with your Traders Exclusive comment. Today, Thursday the 16th, well, the Ides of August, right? I was gone for a while. I'm back. I missed last week talking about the effect that the USDA report had. It was released a week ago on a Friday, and the market had a pretty severe sell-off. Why? Well, we got some fresh fundamental news in the grains. There was an estimated yield for both corn and soybeans. They added 2 bushels an acre for both corn and soybeans. That surprised a lot of the analysts. The average analyst guess was completely wrong compared to what the USDA came out with. So that translates, when you have 2 extra bushels an acre on 90 million acres of corn and beans, give or take, it's a large increase in the supply. So we've gone from trading technicals to trading supply and demand. That was Friday. We saw soybeans drop about 63 cents. We saw corn drop about 30 cents on a severe kind of correction lower. Everybody was very concerned last Friday that we had opened up the door to a lot lower prices with this increase in supply. Lo and behold, we come in on Sunday. They turn the machines on Sunday night. We make a low. Between Sunday night and today, Thursday, soybeans now have rallied back 50 cents off the bottom. So a 63 cent sell-off. We've swung back now 50 cents off the bottom. Corn has bounced about 20 cents off the bottom. So what created this spike back? What created this whipsaw? Basically, it happened last night. There was a press release that the Chinese are going to meet. It was a low-level delegation is going to meet in August to discuss trade issues. That's all it took to turn the market from sellers, from very bearish fundamentals, to an emotional rally back. So this is something I wanted to focus on here real today. The importance of really being very, very disciplined, no matter if you're a hedger or a speculator. When you have markets moving, just for example, in soybeans, that's a $1.11 swing, a $1.11 swing, a 63 cent sell-off and a 50 cent bounce. On one contract, that's $5,500. That's quite a lot of money at risk when you get caught in a whipsaw like that. And I think a lot of people did that. A lot of people got scared Friday, went home short. They probably were long for the report. They lost money in the report. Then they got short on the bearish report. And then the last week, they've lost money again. So if you're not careful in these markets, you can die. It's a death of 1,000 cuts. So how do you avoid that? Well, number one, if you're trading futures, you've got to have tight stops. By that, I mean, if you're short, you've got to have a buy stop above the market so that you're out in case the market moves against you. If you're long, and you need to have a sell stop. And if you don't understand what these terms are, you really need to educate yourself, or you need to find somebody who can help you in that regard. The other way to do it, if you're not going to be trading futures, I really like the options. The options, especially if you're long options. When you buy an option, that's the beginning and the end of the maximum risk you can have. Where you get into trouble with options with risk is if you start selling stuff, collecting premium, that can be a different ball of wax. But if you're long an option, in other words, if you're long a put or if you're long a call, you've got time on that position for it to work out. So when you have a market whipsaw like we just saw in the past 3 or 4 days in the grains, you can have a position which looks terrible one day, 4 days later looks great. Where if you're trading futures, you might have gotten stopped out and lost money. So that's my argument for not only speculators using options, but also hedgers. I can't really stress that enough. So moving forward, we're going to have a lot more volatility. Every night you go to bed, there's a risk that they change the story, and we have another severe sell-off. So these markets, when they move like that, yes, it's a lot of opportunity, but you really have to be very, very disciplined. If you're looking for help with your hedging or you're speculating, I've been in the business close to 30 years now. Give me a call, Chris Robinson.